Good day traders, this is Stefanos on behalf of Tixee, and in today's webinar we'll be giving a look back of the market for the week of the 29th of August until the 2nd of September. Now before we get started, looking at some of the highlights for over the course of the past week, as we mentioned during last week's Outlook, we had Hewlett Packard Incorporated and Hewlett Packard Enterprises reporting their figures for the Q2 earnings season, which is now drawing to a close as well. On the Forex front, we had the all-important NFP report, as the case usually is on the first Friday of each month. For now though, the disclaimer, as always, please note that all of the ideas discussed in the webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So, like we said during the intro, we had both entities of Hewlett Packard reporting their numbers over the course of the past week. Now, they both also reported the figures on the exact same day, which was after the market closed on the 30th of August. Now, first things first, we're going to have a look at Hewlett Packard Enterprises first and see basically what happened with the company's earnings report. Now for that, what you can also use, you can use different earnings calendars, for example, to see the actual outcomes. But what I also like using, you can just have a look on TradingView, and if you just type in HPE, which is the ticker for the particular stock we're looking at, I'll just remove the moving averages for now. And make sure you switch this on the daily time frame, and what that's gonna bring you up, you can see these little icons at the very bottom of the chart. So these are like the past earnings reports. You can also see the future one. So the next one being is going to be round about the 22nd of November. But for now, this was the most recent one. You can see it's also labeled in green as well. So it gives you an indication that it basically beats the earnings estimates. Now, as you can see from the actual figures as well, it beat the earnings estimate by 0.96%, and the revenue estimate was beaten by 0.3%. So it wasn't a very a strong outperformance of the actual estimates, but nevertheless, it's still quite positive the fact that it beats both of the estimates. Now, with regards to the actual reaction of the stock price, let's switch back onto the tixee's web trader, and I'll switch this on the daily time frame so we're on the same page. So this was the day that the earnings report was released. Now, like we said, it was released after the market close. So when that happens, we can expect to see the reaction on the very next day with the open. And even though we saw from TradingView charts that it beat both estimates, we still dropped on the very next day. Now it did drop by 0.4%, which isn't like a huge decrease, but it's still a little bit surprising the fact that it dropped after having a pretty good earnings report. This just goes to show that the reaction of the market is not always going to be as straightforward given the results of the earnings report, because like we saw here, we had a pretty strong one, but nevertheless the stock price still fell. Now usually what the case is going to be is that market is going to react alongside align what's happening with the actual reports, but we're going to have these occasions that, as we can see, the market just went the other way. Now the reason for that, it could be a variety of reasons. It could be the fact that Hewlett Packard basically said that they're going to be moving their operations for good outside of Bulgaria and Russia as well, given the ongoing situation between Russia and Ukraine. It could also be supply issues, because obviously some of the parts may not be readily available, for example, or the fact that also the market had already priced in a pretty positive earnings report, and they were pretty much unwinding their positions when the report actually came out. So like we said, it could be like a variety of reasons, but the point is that we will have sometimes this kind of market reaction, which is going to act in the opposite way of the actual outcome of the report. Now, looking at the other entity, which is Hewlett Packard Incorporated, if I just switch on to TradingView again, you can just type in HP again. I'll just put the Incorporated as well. And you can see it was again released on the 30th, and the little symbol here with the moon just tells you it was after the market close. So the impact was seen on the very next day. Now, the situation with Hewlett Packard Incorporated was a little bit different in the sense that while it did beat the earnings estimates by 0.16%, it missed the revenue estimates by quite a lot, by almost 6%. As you can see from the little figure right here as well. So this is what we will call like a mixed report, where essentially one of the estimates is beaten while the other one is missed, as we can see here. And the reaction was a little worse than that of Hewlett Packard Enterprises, because as you can see, I've already highlighted as well. This was when the market closed, and like we say, it was after the market closed, it was a day on the 30th, and then on the very next day we opened and we gapped down strongly, and pretty much including the gap down, it was a drop of 7.6% or $2.36 per share, which is quite a steep drop in comparison to the other entity. So this one we can clearly see that essentially what outweighed the report was the fact that, like we said, the revenue estimate was missed by almost 6%, which, like we said, it overshadowed the fact that it actually beats the earnings estimate. So yeah, the market was skewed more towards the revenue result, like we said. So yeah, this is with regards to stocks. Now we're going to move on to Forex, and obviously the highly anticipated event for Forex was the NFP report, which came in on the usual on Friday. Just to specify, I mean the first Friday of the month. Now the actual NFP report, the result, it was positive because the estimate was for 300,000 jobs to be created, whereas the actual figure came in showing a job creation of 315,000. Now, as one would expect, when you get a strong release with regards to like an event that is affecting the US dollar specifically, then you can expect the US dollar to strengthen. Now that was more or less the case with most of the major currency pairs. If we look at the euro dollar first, for example, and I'll switch this onto an intraday time frame, on this occasion the 30-minute, this was a candlestick at the time of the release of the event. So we can see prior to that, the currency pair was moving higher and higher, and with the actual release, I mean, the candlestick itself closed more or less like a doji one, and then we did move a little further higher before we dramatically dropped and pretty much to close the day neutral, essentially. So here it formed what we call a 3 drives pattern. So you have one top here, a second one, and the third one before we actually got the reversal towards the downside. Now this was more or less the case as well, like we said, with some of the other major pairs. So if I look on the pound dollar, so you can see it was more or less consolidating before the release, but then we got the release of the event. Again, it was a stronger one. So even though we spiked a little bit higher, we closed on the 30-minute mark lower. And again, in the hours following the event, we just moved a little higher before we dropped. And again, I wouldn't really call it a 3 drives pattern, but you can still see more or less a similar pattern with 3 tops forming around about at this area right here before the market dropped. We can look at one more, let's say the Australian dollar, US dollar. And you can pretty much see this one looks a little more similar to the euro dollar in the sense that we're again moving higher and higher before the release of the event. We get a doji candlestick, then we still move a little further higher, retesting the top that was formed during the time of the release, and then we just basically drop like a stone from that point forward, again coming close towards the open of the day. So the market reaction was more or less the same across the board when the actual figure came out. Now, if we want to look at the kind of ranges that prices form, again, I'm just going to go back to the euro dollar, and I'll still keep this one on the 30 minutes. So you can see at the time of the release, we moved, let's just see here, from 0.99800 all the way up to 1.002. So it was more or less like a 45 or like a 50 pip move during the time of the release. So a 50 pip move is a quite, I wouldn't say, I mean, it is pretty significant. It's still a pretty strong range to work off of. I mean, if we look at the whole range of the day, like looking from all the way down here to all the way up here, it's more or less 100 pips. So during the time of the event, we basically moved half of the day's range, which is, if we put it in this context, it is pretty significant, which is something that one would expect, seeing as how it's one of the most, if not the most popular event when it comes to the FX markets. Again, because it's released only once a month, and obviously it's highly anticipated by a lot of different market players. Now, if we look at the pound dollar as well, just to look at the range, again, we're looking at this timestamp right here. So essentially, we take the top of the range, it was 1.1588, and we went all the way down to 1.1532. So it was like 56 pips, so similar to the movement that the euro dollar made, but again, a pretty decent range to work off of. And on this occasion, I feel like just eyeballing it, it's pretty much even greater than the whole day's range. So you can pretty much see the kind of movements that we can get with the NFP report specifically. Now, it's worth mentioning that the NFP report is not only going to impact the FX markets. I mean, we can see it's impacting other markets as well, such as the commodity one as well. So if we look at the, let's see, the WTI crude, and if we put it, let's just put it in the context of the whole week itself. Let's look first at the dollar index. So just type it in here. And if I switch on the weekly time frame, we can see that it pretty much printed, let me remove some of the lines. It pretty much printed its third consecutive week in the green, which is, it's a pretty, I mean, you can see it pretty much broke the highs from all the way back here, which was back at the beginning or like mid July. So what can someone expect with regards to commodity prices when we see a stronger dollar, when we can expect commodity prices to drop? And if we look at the crude oil, we can see that over the course of the week, it of course dropped, and quite substantially as well, because the total drop was 6.35% or $5.90 over the course of the week, since we basically started close to 100 and we closed down in the mid 80s. And if I look at gold as well, which the inverse correlation with the dollar, the US dollar, is even more pronounced, we're pretty much going to see a similar picture, again with prices closing lower. Like we mentioned, we had, if I switch back again, we had 3 consecutive weeks in the green for the dollar index specifically, and looking at gold, we now closed for the third consecutive week in the red, again just highlighting the inverse correlation between gold and the US dollar. But yeah, this is as much as far as the review and the look back for this past week. I hope you enjoyed the video and you find it useful, and I'll catch you all in the next one. Stay tuned for the outlook as well, as we have some interesting stuff to discuss there as well. Until then, trade safe.